The China Report for Sunday, April 28, 2013. China's currency reform. China's central bank has been talking tough on currency reform while it has also intensified market intervention, highlighting the fine line it must walk in trying to liberalize the yuan. Critics, including the United States, see the intervention as another sign that Beijing is dragging its feet in letting market forces determine the yuan's exchange rate. But the wall of money being printed by China's trading partners under their super loose monetary policies is flooding emerging markets with speculative cash, which has put the yuan under strong upward pressure this year. The yuan is a closely managed currency that is allowed to trade 1% either side of a midpoint set by the central bank each day. However, Beijing is steadily relaxing its tight grip on the currency as it tries to restructure the world's second biggest economy away from a reliance on exports and towards greater domestic consumption. Currently, the yuan is still pegged to the US dollar. Exchange rate is set at 6.17 yuan per US dollar. China railway profits in 2012 were $32 million. China's Ministry of Railways posted a net profit of 196 million yuan, $31.79 million in 2012, up from 31 million yuan in 2011, thanks chiefly to higher revenue in freight transport, a Chinese media outlet reported on Sunday. The scandal-plagued ministry, which was dissolved in a government action announced in March, saw its debt-to-assets ratio climb to 62.2% at the end of 2012 from 61.8% at the end of September. Outstanding debt reached 2.79 trillion yuan at the end of last year, up from the 2.66 trillion yuan at the end of the third quarter. China Q1 factory profits up 12.1%. China's industrial profits grew 12.1% in the first quarter this year from a year ago, official data showed on Saturday. Chinese industrial firms made total profits of 1.17 trillion yuan, $189.78 billion in the first 3 months, the National Bureau of Statistics (NBS) said in a statement on its website. In March, profits were 464.9 billion yuan, up 5.3% from the same month last year, it said. Profit growth began showing signs of resurgence in December, gaining 17.3% year-on-year. That followed several tepid months that restrained overall profit growth to a modest 5.3% year-on-year in 2012 to a total of 5.6 trillion yuan. Among 41 sectors surveyed by the NBS, 29 reported rising profits in the first 3 months, while 9 reported shrinking profits. 2 sectors reported turnarounds in profitability and 1 reported a shrinking loss. China wants more domestic consumption. China's leaders say the country must guard against financial risks and boost consumption amid signs the recovery in the world's second biggest economy is faltering. China needs to cement its domestic economic growth momentum and guard against potential risks in financial sectors, the Politburo Standing Committee said in a statement late last week which was published by the official Xinhua news agency. Macroeconomic policies should be stabilized and micro-controls in some sectors should be loosened, it said after what Xinhua said was a special session on the economy. Recent data has showed China's manufacturing is expanding at a slower pace, adding to evidence a recovery is losing steam after an unexpected slowdown in growth in the first quarter. Advertisement. The Politburo Standing Committee's comments provide support to the State Council's decisions and don't imply policy changes. That's the China Report for today. Zaijian.